You don't have to overpay the IRS each and every year. You see, there was a wise man that once said that there are two things that are certain in life. One is death, two is taxes, both equally bad in my humble opinion. Because the truth is, there's no reason why you have to overpay on taxes each and every year. You could be like this guy. This is one of our clients. He went from owing about $46,000 right when he started working with us to cutting his bill to a little bit over $23,000. Pretty good ROI if you ask me. So today I'm going to show you guys 5 ways that you can cut your bill by at least $5,000 each and every year, or in some cases 20 like our friend above. Now, if you just want us to do this for you and take all the headache off your hands, click the link in the description of this video, book a call, and we'll get you on the right path right away. My name is JT Pells, and I've been a CPA for the last 10 years. During that time, I figured out some of the easiest ways to pay less in taxes each and every year without crazy corporate structures and all the other nonsense that doesn't apply to most people. You see, most people look at the tax code in the complete wrong direction. Most people think that the IRS and the tax code is there to make sure that you pay the most amount in taxes possible. But that couldn't be further from the truth. You see, the tax code, it really is just a playbook, like our friend Barney Stinson here, to pay less in taxes. When you hear people like Warren Buffett say that he pays less in taxes than his secretary, that generally is the case because, like I just said, Warren Buffett has figured out the playbook or at least has followed the road to paying less taxes. You see, the Internal Revenue Code or the tax code, it really is an incentive. For example, if you are a business owner, you're creating jobs, you're creating housing if you buy rental properties, you're doing things that the government is not inherently good at. And in that case, the IRS and the tax code, or government in general, decides to give you tax breaks and ways to eliminate your taxes. So now that you kind of understand that there are tax breaks and there is a roadmap for you, let's go over how you guys can implement some of these strategies in your own business. The first thing that we want to do with all of our business owners that come to us is we want to make sure that they are set up in the correct tax entity. Everybody always thinks that just because you create an LLC, tax deductions rain from the sky. However, that couldn't be further from the truth. Let's think about it. Limited liability company or corporation. All an LLC does is it limits your liability. For example, if you own a rental property, right, and somebody slips and falls at your house, they are going to sue your business, not you personally. That's all an LLC does, right? Because when you are a business owner, you inherently pay 3 types of taxes each and every year. Number one is your federal taxes to the IRS or to the government. Number two is the state in which you live in. For example, I live in Iowa. That means that I pay taxes to the state of Iowa. And number three, you pay self-employment, otherwise known as Medicare and Social Security. When you are an LLC, you pay those first 3 taxes each and every year. However, if you elect what is called an S corporation status, you get to eliminate this self-employment tax right where my mouse is. And not only do you get to eliminate it, it cuts your overall bill by about 10 to 12% each and every year. So in this case, if you have a $90,000 profit and you elect S corp status, you get to cut your taxes by about 9 or 10 to 12% each and every year. It's probably around $9,000. Now, the one reason why I pick that number is because with an S corp, your taxes inherently become slightly more complicated. You have things like a separate tax return, you have to run payroll for yourself. So some of those tax savings at a lower profit point end up getting eaten up by administrative burdens. But we want to make sure that you are in the correct type of tax entity. That example that you saw of that particular client, this one move helped him cut somewhere in the neighborhood of $12,000 just by doing this. Now, the second thing that we want to do, or number two, is you want to make sure that you establish a home office. The reason why we want to do this is that it turns your personal expenses into legitimate business expenses. One of the biggest things about different tax strategies, a way to cut your bills, is we want to look at things that you are already doing every single day and make them tax deductible, not change your habits, so to say. So, for example, if you have a home office or you work from home, that means a portion of your rent, your utilities, your mortgage interest, property taxes, homeowners insurance, renters insurance, all of those things that are inherently personal, you get to cut a portion of that on your tax bill. For example, the really only thing that you have to do is you have to have a place that is exclusive use for business. One of the easy examples is having a spare bedroom. If you have a spare bedroom, you have to only use that for work, right? It cannot be your man cave or your living room. It has to be one that is exclusively used for business. With our client, he was not taking advantage of that in past years. And by having this strategy, this helped him save an additional $2,500 to about $3,000 just by doing this. That's the thing that we do with all of our clients. We want to make sure that they are taking advantage of the things that they are already doing in their personal life. The next thing that we want to do is we want to stay on the same theme of turning personal expenses into business expenses. For example, for those of us that have children, or even when you were a kid, you most likely worked for an allowance, whether that was taking out the trash, whether that was cleaning the bathroom. You worked for some type of wage, and your parents would give you a few dollars an hour, and then you'd make good decisions with those, like we all do. However, what we do with our clients is we want to turn those allowances that are not tax deductible and instead pay our children a wage to work in the business. Now, one of the big things that I want to impress upon you is that you have to actually pay your kids a real wage and it has to be for legitimate work. It can't be because they happen to share your DNA or your last name. For the example of the client that we had above, he had a tow truck company and his son was, I think, 12 years old. On the weekends, he used to go with his dad to work. So that was a perfect way. We turned his allowance into working with him on the tow truck, and he was able to pay him $500 each and every month. This helped him slash somewhere around another $1,000 in taxes just by doing this. The reason why this is such a great strategy is that the father, he was in the 20% tax bracket, federal and state, and he shifted that money, or at least $500 a month, from the 20% bracket down to his son, who earned less or didn't earn enough to file taxes. So it went from being taxed at 20% down to 0%. And let's be honest, it was money he was already going to give his son just for existing. We might as well now just turn that into tax deduction. So you see, staying on this theme, you want to make sure that you are turning expenses into personal expenses into legitimate business expenses. And I want to harp on this. It has to be legitimate work. The same amount of money that you would pay a stranger's son to work with you. The next thing that we want to do is that we want to make sure that we're buying equipment that we need at the end of the year. You see, let's say it becomes November and you need a new car or a new piece of equipment for your business. Instead of waiting until next year until the piece of equipment craps out like a computer, buy that expense at the end of the year. In the example of our client who saved the $20,000, he needed a new used truck. He came to us in October and he said, I'm thinking about buying a truck, but I kind of want to wait until the new year. And I told him, well, since you're already thinking about buying a truck, why don't we buy a new used one in December, right before the end of the year, and then you can get a write-off for the entire year. He ended up buying a truck at the end of the year, and this helped him save close to probably $3,000 in taxes. Now, this is something that you want to be doing strategically, right? You don't want to just go out and buy a computer or a car just because you need a write-off. That would be stupid. However, if there's something that you need, by all means, go ahead and buy it and buy it a little sooner than you think you might because you can increase your deductions and pay less in taxes each and every year. The fifth and last thing that we do with all of our clients is we want to make sure that you are paying things strategically or prepaying recurring expenses. Now, what do I mean by that? For example, there are a lot of expenses that all of us have in our business each and every year or each and every month. For example, we all have rent, we all have software subscriptions, we're all going to travel somewhere. With that particular client, what we did is we broke down what his current or monthly current expenses were. And in January, we ended up paying those at the end of December. Because let's be honest, you're going to pay those anyway. By him paying his January expenses a few days early in December, that helped him get an extra $7,000 in write offs that he would have incurred. By doing that, that helped him cut at least another $1,000. You see, we want to be strategic in what we're doing. A lot of times on TikTok, you'll hear, go out and buy equipment, go out and buy a car, go out and buy all this stuff. However, a lot of times we end up not needing that stuff. We want to be paying for things or buying them strategically, just like this client did. Now that you guys know all five strategies, all the way from picking the right entity to paying your kids to establishing a home office, buying equipment at the end of the year, and prepaying some of your current expenses, I want to leave you with this. This is a guy who was dying of thirst in the desert. All the information that I told you guys, it's all out there on the internet. As a wise man once said, the internet is an inch thick and a mile wide. Now, you may be able to find all of these strategies and how to do them. However, you want to make sure you don't die of thirst, just like this guy. He will eventually find water, but he's probably going to die of thirst and his organs are going to shut down. Now, the next picture I want to show you is again where we started, where this client went from owing $44,000 all the way down to $23,000. If you want us to do this for you, make sure you click the link again in the description of this video where you guys will be able to hop on a call with us and see if we're a good fit. If we are a good fit, we can just take all of this off your hands and you don't have to worry about this. As I like to tell all my clients, go out and make money. You make money by providing your skill set or your service, not by researching the tax code. And my name is JT Pells, one of the owners here at P&T Advisors. We look forward to working with you. And again, click that link in the description. You will not be disappointed, and I will see you in the next one.